Wow, what a day in the market. It was a fascinating story today, really a tale of two completely different economies. You have the physical world flashing these huge warning signs, while on the other hand, the digital world is just hitting the gas. So let's break down what this big split actually means for you.
So coming back from the long weekend, the market gave us a classic head-scratcher. The S&P 500, it climbed a respectable 0.4%, but the Dow Jones, dead flat. It was totally dragged down by weakness in old-school retail. This one chart tells you pretty much everything you need to know about today's economy, and we're about to show you exactly why.
All right, let's start with the first half of this story, those warning signs that are blinking like crazy in the old economy. And, the most glaring signal is coming from a company that really acts as a barometer for the average consumer's financial health.
And here it is, a huge drop down 4.2% for the home improvement giant, Home Depot. Now, this wasn't just some random dip. This was a direct gut reaction to their latest earnings report, which, well, it contained a bit of a bombshell for the market.
You see, Home Depot, ticker HD, it's so much more than just a place to buy hammers and paint, right? It's a direct window into the confidence of the American homeowner. When people feel secure about their money, they invest in their biggest asset, their home. But when they don't, well, that's when you see numbers like the one we just saw.
And here is the bombshell I was talking about. This is a direct quote from Home Depot's management call. The do-it-yourself customer has completely vanished. I mean, that is a stunning admission. So the big question is, where did they all go? Well, it really just boils down to the consumer squeeze. First, those high interest rates we've all been talking about, they are finally starting to bite, and bite hard. People just aren't taking out loans for those big projects anymore. And the results? All those DIY dreams, the kitchen remodels, the new decks, they're all being put on hold. It's a pretty sobering reality check on the health of the American middle class.
But okay, while the old economy was slamming on the brakes, the new digital economy was hitting the accelerator. It was a completely different universe over in the tech sector, especially for this new class of AI challenger stocks.
Check this out. Chipmaker AMD surged an impressive 5.8%, pretty aggressively outpacing its giant rival Nvidia for the day.
So what was behind that huge pop for AMD? Well, the whole story here is about challenging a giant. Rumors were flying all day about a potential partnership with Microsoft, which would put AMD's chips inside their Azure data centers. You see, the market is absolutely starving for a real alternative to Nvidia's total dominance in AI. And today, investors bet big that AMD could finally be that challenger.
And if you thought that was a big move, just take a look at Palantir. The stock absolutely rocketed up 8.5% on massive volume.
So what in the world is driving Palantir's explosive move? In a word, defense. They just locked in a major expansion of their government contracts for AI-powered logistics. And in an increasingly unstable world, investors are starting to see Palantir less as a simple software company and more as a piece of essential modern warfare infrastructure.
So it's a perfect split screen for the market. One side is physical goods that are slowing down, and the other is digital intelligence that's speeding up. It's really that simple.
Okay, so how do you take all this insight and sound just a little bit sharper tomorrow morning? Don't worry, we've got you covered. Here is exactly what you should say to your colleagues.
On Home Depot, you'll say, Home Depot's earnings were rough. Basically, nobody is doing do-it-yourself projects anymore because nobody can afford the lumber and the mortgage rate. It's officially the year of do it later.
When someone brings up the AI race, here's your take on AMD. Did you see AMD pop today? It feels like the market finally realized Nvidia can't make every chip in the world. It's like when everyone is fighting for a reservation at the trendy restaurant, and you realize the place next door has the same food and no wait time.
And finally, on Palantir. Palantir is up almost 9% again. It's wild. Half the market thinks it's a meme stock, and the other half thinks it's Skynet. Honestly, with the government contracts they're winning, I'm starting to think it's Skynet, and I should probably own some just in case.
So that leaves us with the big question. Home Depot just told us the consumer is tapped out and stopping renovations. Do you see this as a warning sign that a recession is actually starting? Or is Home Depot just making excuses? I want to hear what you are seeing in the real economy. Comment below. And don't forget to subscribe to Market Fluency for your daily edge.